Hello and welcome to Macros with Maithili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. This week we're going to take a hard look at the newly established National Investment and Infrastructure Fund, NIIF. With only the appointment of the CEO pending, the NIIF is all set to give a fresh impetus to the infrastructure sector, or so the government believes. But like past efforts to address the huge infrastructure deficit in the country, will the NIIF also disappoint? What should we do to ensure that this time around the NIIF lives up to its promise? We're going to discuss all this and more with two of the best brains on the subject, Santosh Nair, CMD, India Infrastructure Finance Company Limited, and Soumitra Chaudhary, well-known economist and former member of the Planning Commission. Welcome to the show, Santosh and Soumitra. Well, we all know the numbers, how India needs $1 trillion for infrastructure investment over the next few years, how infrastructure investment can play a very important counter-cyclical role, and so on. But we also know the not very happy story of past efforts and how they've not succeeded really in building infrastructure in the country. So the question, as I said earlier, is whether the NIIF will prove to be that magic wand. More important, even if it has the potential to do what it says it will do, how do we ensure that that potential is realized? Let me start with you, Santosh. Since you're an old hand at the game, having had years of experience, first in the State Bank of India, then IFCI, and now IIFCL, you've seen it all, as it were. Starting from the time when infrastructure finance was seen as a domain of the government and development finance institutions, to when commercial banks entered the space and burnt their fingers, to public-private partnership, and now to alternate models like the NIIF. What are the lessons that we've learned? Have we learned anything at all? And can you sum it up for us very briefly before we get into a more detailed discussion?
Yeah, I think, see, this is, we are not comparing here with commercial banks' portfolio NIIF. NIIF has a different purpose. You know, infrastructure lending is in the country has mostly been done by commercial banks because, you know, we gave up on the institutions earlier, development institutions. Now, commercial banks beyond a point, you know, I agree that they have a problem in stress assets and things like that. But then if commercial banks are not done infrastructure at that time, you know, I always say you and I will not be sitting in air conditioned rooms today. But be that may be, that what has happened is due to various factors, often factors beyond the control of the developers or the lenders, projects are got stranded. Now, it's very important that, you know, first we rescue the stranded projects because India at this stage cannot afford to lose projects. Second thing is, like you said, we need $1 trillion, maybe not in the 5 years, let us say 10 or 15 years also. We don't have the capital in the country. So, we need to mobilize this kind of investments. Overseas investment will generally come in only for post construction. So, where do we find the money for construction? So, we need to look at that.
Soumitra, the cabinet note of August 2015 states that the objective of the NIIF is to maximize the economic impact mainly through infrastructure development in commercially viable projects. Now, the key phrase here really is commercially viable projects. The problem is that given the long gestation period of all infrastructure projects, a project that is commercially viable at one point of time may cease to be so at some other point of time, like we saw with the Adani and the Tata Power projects, when the price of imported coal really shot up dramatically post the financial crisis. So, how do we address these issues? How do we make them commercially viable?
No, that even if you give it a long, you know, normal project of a, say, let us say pharmaceutical project or something like that, this commercial viability can always happen and new technology can come and replace the market. And I would rather say that once the concession risk is handled well, infrastructure is a much better risk because infrastructure demand doesn't go down. So, obviously, you have to take a call, and if you are taking in this NIIF, government has very clearly said that they will take 49%. Other funds have to come in, mostly overseas funds. And they will insist on commercially viable project. World over, commercial infrastructure projects are commercially appraised and funds are provided. Same thing will happen here. Only thing is the appraisal standards probably will be far more stringent.
So, Soumitra, can I toss that question to you, the question that I asked Santosh earlier, that how does one ensure commercial viability of a project, even though all these infrastructure projects have long gestation periods, during which time you could see changes in the commercial viability? Soumitra?
The infrastructure project work within a concession agreement. A concession agreement, if there is a flaw in it, which Mr. Santosh was trying to point out, then the commercial viability will be undercut. Normally, in a power plant, the cost of fuel is a pass-through. We had a terrible experience with Enron, and as a result, we went to the other side of the pendulum and did not have the provision of a pass-through for fuel. So we had a fixed cost for fuel, and fuel prices went up, taxes were imposed, and the whole thing became unviable. In a concession agreement framework, viability is contingent upon what are the parameters of the concession agreement. So if you craft it properly, there should not be a problem at all.
Santosh, the functions of the NIIF have been set out as fundraising through suitable instruments, attracting anchor investors to participate as partners, servicing investors, approving candidates or companies, institutions, projects, etc. for investments, and periodic monitoring of these investments. So, which of these do you think is the most important? To my mind, it perhaps would be preparing a shelf of commercially viable projects. Would you agree with that assessment?
Yeah, obviously, no, there will be investment advisors. For example, ILFS has been made the investment advisor for the initial period. Once the fund starts off, I think they will probably have more than one investment advisors. They will present projects based on their commercial viability, and there will be an investment committee of the board which will approve such projects. So assessment of those projects for their viability is important, and once investment is made, obviously you have to go on monitoring these projects.
Soumitra, would you agree with that assessment of Santosh? Is funding really an issue, as we saw with the recent IPO issues, whether it was of Indigo, Autocolars, Alchem, or the recent experience with tax-free bonds of NHAI, REC, etc. There doesn't seem to be any dearth of money, not if the issue is good enough. So why is funding considered such an issue?
At the margin, there may not be an issue of funding, but as the volumes go up, I think funding constraints will emerge. So you can certainly there probably is enough appetite and enough funds in the country for a certain amount of infrastructure projects. But once you take it up over and above that, once you increase the volumes, that supply may not be there. So I think one has to look at in terms of both domestic financing as well as international financing, A. B, I think the NIIF is also trying to look at projects which are already struck. Now that's a much more difficult issue actually than a greenfield project, because the ones that are stuck in a particular history and they have specific problems. Untangling it is bigger challenge. This is not plain supervised lending, because you have funds who are not active investors. There has to be an asset manager or investment advisor who's got to be the supervisory element. What is the responsibility supervisory framework? I think these are all issues that need to get answered once the NIIF goes forward.
Santosh, given your experience, vast experience in the infrastructure sphere, which of the sectors do you think offers the most promise? Roads, railways, airports, ports, power, and why? After all, the economic survey talks about stalled projects of almost 8% of the country's GDP. Now that's a humongous amount. So should we start with those projects which are perhaps most amenable to solution? And if so, in which sector do they lie? Santosh?
Madhuri, before I answer this question, can I add out something to what you asked earlier? You see this, when you talk about fundraising, you must understand that infrastructure projects are basically long term and they don't have any rating, and when they start off, it's very difficult for them to raise capital unless it is supported by the balance sheet of some other company or the parent company, which is why many of these projects, even when they are standard, they find it difficult to raise further capital. The second issue I wanted to mention is that NIIF is basically structured like a fund of funds. So under the fund of funds, you can have any different type of funds depending on the investor appetite. There can be investors who can come in at the apex level, the fund of funds, or there can be investors who can come into various subsector funds depending on their appetite. Now coming to the current question, you asked me about the sector. Sector actually depends on time to time. Currently, for example, renewable energy is doing well. There is a lot of equity investment coming into renewable energy because the equity requirements are also not very big. Ports are doing well. There is a lot of overseas interest in investment in ports. Roads are reviving. I am sure railway privatization also will get a lot of interest. Once the this hybrid annuity project kicks off, I think roads also will come in a big way. And to me, the most interesting sector which looks now is the power sector, because power sector has been basically sort of condemned sector, or it's got a bad name in the past because of various factors. Coal was an issue, power purchase agreement was an issue, they were not being honored, DISCOMs could not pay for the power, so they were not buying power, they were resorting to load shedding because they didn't have cash. Now all this is getting resolved one by one. So what happens is, if you look at our per capita power consumption, it's roughly about 1/4 that of China. Now, India cannot remain at this low level forever. You have a middle class moving in, and even if it becomes 2/5 or 3/5 of China, what happens is that we don't have enough capacity. We all feel that the current capacity is enough to meet the current requirement. But what happens when the power consumption doubles, which can easily happen in a low per capita consumption country like India? And no power investment has been made in the last 2 years. So, if you make an investment today, it takes 4 years for a project to complete, 4 to 5 years. So, I anticipate in another 2 or 3 years there will be a power shortage and all the existing projects become highly viable.
Soumitra, do you share Santosh's optimism? Because after all, he spoke of power, and it is a fact that there is no power capacity going to come up in the near future, given the problems that we've seen in the power sector. And this is the third bailout we are seeing in the power sector. So, are you optimistic as Santosh is on the power sector, or you think no investor will touch the power sector with a barge pole, given what we've been through and the political economy of the power sector? Soumitra?
I think one should not paint the entire power sector with the same brush. If you look, the problem of the power distribution utilities in 2010-11, the same states are involved, Tamil Nadu, UP, Rajasthan, Madhya Pradesh, Haryana. The same states are involved as of now. And what really happened was in 2010-11, though they had raised the tariffs, they had not transferred the debt onto the government. They did not, actually fell through on that, which is what the government is trying to do today, but it is trying to pass the differential yield cost onto the banks. I don't know how that will work out. So, all the other, after all, we have a country of 30 states and territories, and if 4 or 5 of them have a problem, which means 25 of them don't have a problem. So, one should not say this about everybody. Yes, there are certain states which have a daily budget of say 40 or 50 crores like UP. Once they exhaust the 40-50 crores, they resort to load shedding rather than buying power, which is why PLF has fallen to below 60% in some months. So probably in November also will be below 60% for private power plants, at which level of utilization they are not really very attractive propositions. But just like the power situation or the power distribution utilities in Maharashtra or Gujarat or Karnataka or Andhra Pradesh or even West Bengal are actually able to pay their dues and actually pick up power. Andhra is not entirely true of Andhra, but why should not the others be able to reform? So I don't think one should simply tar the entire industry with the same brush. Secondly, this is not the third bailout. There was no payment made by the government in 2010-11, and what I can understand even now, government isn't proposing to pay any money. So let's not call it a bailout just like that. So I think yes, if India has to grow, power consumption will have to grow. Power consumption cannot remain at the level that we are at. And even a modest increase would mean a substantial increase in the amount of power demanded. And that capacity is still coming on. There are projects online, but these are projects started a long time back, 3 or 4 years ago, and fresh projects are not being commenced. So there is a pipeline problem. If the demand recovers, then we, as Santosh was saying, that we could run into a problem in the near term.
Okay, so I think the only point really on which I agree with both of you is on the fact that yes, the power consumption does need to grow, the per capita power consumption is very low. But on the issue of whether the power sector is a promising sector and whether people will be willing to put their money where their mouth is, I'm not so very sure really, given the problems that we've seen and how the government constantly interferes as far as fixing power tariff is concerned. But I'm afraid on that note, we have to slip into a very short break, but please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Maithili, and we're discussing the just established NIIF, the National Investment Infrastructure Fund, with Soumitra and Santosh. Soumitra, let me start with you this time. The Kelkar report on rejigging public-private partnerships that the government has released coincidentally with the establishment of the NIIF offers a number of suggestions, notably for setting up a dispute settlement body and independent regulators. Which of these two you think is most important, and which one do you think we'll really see actually happening on the ground?
I think a dispute resolution system is a good idea, but I think an independent regulator is a bad idea. We've got too many regulators. A. B, I think the PPP projects, if you do PPP where it makes sense and you do EPC where it makes sense, real problem with roads, I think you don't have a problem. The difficulty was forcing projects which are not naturally aligned to be PPP into a PPP or a BOT model, and they are the ones who run into a problem. So we do not repeat the mistakes of the past, and we actually allow an exit from this BOT PPP style of projects where these projects are not really sustainable in that model and let them move to an EPC framework, I think the problems of the past can be resolved.
Santosh, would you agree with Soumitra, if I understand him, that the choice was really, the problem really was because of the choice of the projects we took for PPP? There are certain projects which don't lend themselves to the PPP route, and there maybe we'll have to go back to the earlier EPC route. But even assuming, that's my first question to you really, but even assuming that the government implements the Kelkar committee recommendation, and that is a big if given how regulatory capture, we've seen that happening by ex-bureaucrats, how does one really strike a balance between allowing scope for renegotiation and at the same time not shifting the goalposts halfway through the life of a project?
Regulatory independence is very critical for success of PPP, and investors are not willing to come in unless there is independent regulation. Now, if you can do the entire infrastructure in the country through EPC route, fine, then you don't need a regulator or you can do that. But can we do that? Do we have the wherewithal to do that? We don't. That is why we need PPP. Once you decide to go for PPP, then we need independent regulation. And now you have to have a careful process of selecting the independent regulation. That, I mean, there has been some various sectors capturing this, but then I think over a process we will evolve towards the correct selection process. That is why the suggestion has been given both in the Kelkar committee and also the R.C. Sinha committee for the road sector.
But do you agree that there are certain projects where we will have to resort to the EPC route and where PPP will not work at all, even if you have independent regulators?
Unfortunately in our country, there is a confusion between infrastructure and PPP. People assume that all infrastructure can be PPP. It's not so. There are projects which can go under PPP and projects which cannot, and it also depends on the transfer of risk appropriately to be done, etc., and the revenue stream, how it can be banked, is bankable. So many other things are involved. So all projects cannot be PPP. And when you have to do a project and it cannot be PPP, obviously you have to go for the EPC route.
So how does one decide which is lends itself to PPP and which does not, Santosh?
Yeah, that you have to look at the project. Each project, examine it, its cash flow, its viability, transfer of risk, whether it is possible or not, what sort of risk can be transferred to the private sector, what sort of interest private sector will take, whether it is viable for independent regulation, etc., and then we see that.
Soumitra, would you agree that a good rule of thumb for distinguishing in what can be done by EPC and what through PPP is that if you choose those sectors where the political economy influence is very strong, there maybe PPP will not work, because ultimately the private promoter will not come in when he doesn't have, he cannot decide the tariffs on a commercial basis. So can we say that wherever there is a political economy element is very strong, there it should be done as an EPC, and elsewhere where you can talk in terms of commercial viability, that perhaps you can try through the PPP route. Soumitra, could that be a good rule of thumb?
You see, on the power sector, we already have a regulatory system. We have a state regulators, we have a central regulator. That fixes the tariff. There is no confusion there. The problem there was different. In the case of the port sector, there is some kind of a regulator. In the case of the airport, there is some kind of a regulator. So I think this great desire to have more and more regulators, I think is rather misplaced, number one. Number two, on this issue of how do you determine, there are some projects where there are very obvious likelihood of revenues being attended. You see, why do you want to go for a PPP model at all? The reason to go for a PPP model is primarily that you want the private sector to raise capital themselves, so that is not a burden on the government. And secondly, there is some project efficiency. So you look at projects which are very likely, let's say expressways perhaps near the city, which is likely to generate revenues, but you don't want to do it in highways. Also, there is an issue of do you want to get things done on time or do you want to keep on waffling? And I think if you want to do it on time, and I think basically if you are in the business, you roughly know what it should be go to the EPC route and what should go to the BOT route. My experience the last so many years has been that the people on the ground, whether it is the roads department, highway department or the NHAI, knew jolly well which are the projects that could possibly go to PPP or go to EPC, but somebody else wanted to force EPC projects into PPP mode. So the people I think people who have sufficient experience naturally know that this goes there, those things go there. There may be a doubt about a few which you need to examine closely.
Santosh, one of the biggest problems with infrastructure projects really has been that of land acquisition. And here the Kelkar committee has made a recommendation that the entire tendering process should not start until at least 80% of the land has been acquired. Now, given what we have seen with the land acquisition bill and given what the law is today on paper and what it is in reality also for as far as acquisition of land is concerned. How reasonable is this kind of suggestion? Can we really ever go ahead with infrastructure development if you have to first get 80% of the land first?
Yeah, I agree with that, but then two mistakes won't make it a right, because why are so many of the projects stranded? Because they are not been able to acquire, particularly road sector. The land acquisition has got into problem, or the NHA has not been able to deliver the land which was originally promised. Now, if you don't have at least 80% of the land, the project cannot take off. Project will not be viable.
That's a very ambitious goal, 80% of the land being acquired first. But Soumitra, can one try innovative techniques like what the Andhra Pradesh Chief Minister has tried through land pooling? So acquisition need not necessarily mean acquisition, as we earlier understood, of buying out the existing owners, but doing things like land pooling. Could that be a way out to ensure that that 80% requirement is met? Soumitra?
You see, the land acquisition is actually done by the state governments. So the state governments have a better sense of what will actually work in a given situation or will not work in a given situation. So if they have an innovative idea which sorts out certain problems, certainly listen to them. I think there are many ways of doing this, and this 80% rule doesn't really solve much problem. To give an instance, suppose you want to build a highway and the highway passes through, let's say, to some small townships in which you want to acquire land. You can get 80% of the land in the fields and not 20% of land in near the towns. You get nowhere. So as these 80% rule sort of looks very good, but the difficulty is always with that 20%. So I think one has to look at it in a can-do basis. Can we do it? If a certain alignment is likely to create a problem, look at a different alignment. Then there are the other issues. I mean, you can have acquired the land, but the highway, for example, goes through a forested area. And the court doesn't want to, the MoEF doesn't want to give permission for, let's say, 200 meters. So a 50-kilometer stretch can be stuck, because the courts have said that if there's a 200-meter stretch, you don't come do the remaining 49.2 kilometers and come and tell me that you spend the money, therefore agree on this for 800 meters. I will not agree. So the whole project gets stalled. So there are these issues, but these issues have always been there. You have to be energetic and deal with it. These are not possible to be solved by a given stroke of pen. There are particular problems and they need to be solved collectively and aggressively.
Absolutely, it's a really tough job. But Santosh, we're running out of time. But if I were to ask you, on a scale of 1 to 10, if you were to rank the prospects of success for the NIIF, where would you put it? At 5 or above 5?
Above 5, because I think country requires it, and I think there will be a demand for these funds, and these funds can contribute a great deal to reviving this infrastructure sector in the country.
Soumitra, I'm going to pin you down a little bit more narrowly. Santosh said above 5. Can I get an exact number from you? Would you like to give it a 6 on 10?
I have no idea what the NIIF is or how it will work. So I think it would not be fair to shoot in the dark, as it becomes so common nowadays. You don't need to know it, but you can have an opinion. I don't have an opinion on this. I wish them the best of luck.
Absolutely, yes, it is true that the proof of the pudding really lies in the eating. But given our dire need for infrastructure, there can be no denying the need to keep trying. The NIIF is an idea that is worth pursuing, but it's unlikely to succeed really unless the entire ecosystem changes. And that means the government must allow these projects to function on commercial lines. Read at arm's length distance from both bureaucrats as well as politicians, and civil society on its part must accept that there is no free lunch and it must be willing to pay, whether it's for power or water or railways. I hope you do agree with that, Santosh as well as Soumitra.
Yeah. I just want to add one sentence on the land acquisition. Yes. See, whatever the problems in land acquisition we may have, all projects require money to be complete, and the lender's money will not come in unless the land is, at least 80% of the land is in place, because they have learned from their past mistakes.
Absolutely. So ultimately,
we have
the
to resolve the
line,
issue
absolutely,
of land acquisition rather than starting up with less than 80%.
Sure. Land really, we come down to the brass tacks that it really is land and land once again. But thank you so much, Santosh as well as Soumitra, for joining me in this discussion. Thank you also for watching. But we'll be back next week with yet another edition of Macros with Maithili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.